Welcome back. Our next guest, he's always got a unique take on these markets, and that's why he's on all the other channels. We're lucky to have him on ours as well. This morning, his research had an interesting angle, I thought. He's labeled them what he calls the 4 high-level thoughts to guide us through this week. Now, he gives us some great advice on staying focused. He says that's crucial to avoid getting sucked into the minutia. When the headlines start running and the internet starts spinning, your head kind of caves in, doesn't it? Well, instead, he says, stay focused, absolutely focused on the bigger picture and stocks that can succeed despite it all, right? Something we talk about regularly. He's spot on there, I believe. He also says that the market still has some legs. He notes that there is still plenty of upside, and here's why he thinks so. The Fed still hasn't accommodated. Institutional money still is on the wrong side, and the tariff narrative changed the calculus. And finally, what we've just got done talking about, the $7 trillion that's still on the sidelines, looking for a home. He says a lot more, too, so let's get him on to hear what he says. Please welcome to the show, Mr. Keith Fitz-Gerald. Keith, I kind of did I ripped off a little bit of your notes there, but I thought they were good. We had Nancy Tengler talking about a lot. Well, you just said in those notes, especially that $7 trillion number, that's pretty big. Actually, Eddie Gabor, who was on right before you, he mentioned it, too. That's a lot of money that has doubted this rally, isn't it?
Well, it is. Not only is it a lot of money that's doubted the rally, but it is a lot of money now, Scott, that has to find a home because much of it's in the institutional world. And what they don't want is clients asking questions about why don't we own NVIDIA? Why don't we have Tesla? Why don't we have AMD? Why don't we have Palantir? It's the why don'ts that are going to get them come bonus time. So I think that's going to be a tremendous tailwind if we can keep the wild cards out of the equation.
And I mentioned this a little bit earlier, and maybe tell me if you think I'm wrong. It's okay if you think I'm that way. But, I mean, the smart money, they were the ones that sold the market off. They were the ones that thought the world was ending. They were the ones that believed that Donald Trump was actually genuinely trying to ruin our economy. And it was the retail investor that stepped in and bought it. And I feel like those hedge fund traders or the investment banks that got involved with all those sales, they might have been trading their politics a little bit there, right? And maybe the retail investor saw through that and didn't believe mainstream media, and they're the ones that started to buy April the 8th, and they've done well. And the folks that are still believing their politics still haven't gotten back in.
Well, I think you're on. I think the attribution is a little different, though. I mean, if even half the scuttlebutt I'm hearing is correct, the institutional folks had failed models, they had failed investment mandates, and they just got too smart for their own britches. The retail investor, on the other hand, believed what you and I talk about frequently on your show. You go with the quality names. You don't give Wall Street a chance to separate you from your money, and you think like a shark, not a minnow. Take a deep breath. This too shall pass. Retail lived it. The institutions wish they had.
So we talked to a lot of folks out there that just do on my show. We're talking to one in the next segment, Craig Bolanos. He manages, retirement money. He manages your education money, those things that you can't afford to lose, right? Your money for your health, right? And everybody's managed on a singular basis. He doesn't trade a big fund. And when this was all happening, he's not the only one, but when this was all happening, I was asking all these guys that manage money like that, have we seen capitulation? And they had not. And I was waiting for that because I thought that would be the low of the market. But there wasn't. The retail trader had not capitulated. The retail trader was doing the absolute opposite, and they were buying this market. And I think that's the first time really in my 38-plus year career that I've seen something happen like that where we didn't have retail capitulation turn the market around. It was actually the retail trader that just bought it.
Well, it was the institutions that capitulated because their risk got out of line, their margin got out over their skis, and they had no other choice. And so, I think they've learned some very powerful lessons. Now, whether they correct, I don't know, but how they correct is going to be critical because they're going to have to find a home next to all that retail money, something I call it's FOMO season, because they're the ones, the retail guys are on the ball. The institutional guys are the ones that are now fear of missing out.
All right, speaking of missing out, are we going to get any rate cuts this year? What are your thoughts?
I don't think the Fed knows where there's coming or going. It doesn't have a proactive bone in its body. So, I was just looking at something before I came on the air saying, oh, wow, the Fed survey reveals that inflation expectations are coming down. Like, well, no kidding. Firm command of the obvious here, people. I think that Jay Powell is putting blood in his left arm and taking it out of his right arm. He's caught between a rock and a hard place. I think he probably wants to cut. He's not stupid. But I think doing so would be tantamount to admitting he's wrong, especially with the president's political pressure being put on him.
Don't you think he runs the risk that if he waits too long and things do, he could end up having to cut sharper, harder, faster than he really wants to. But we'll wait and see. That's all speculation.
Well, I think the market's going to make that decision for him. I think he is a day late, a dollar short. He's probably already caused the next 3 crises, frankly. But I'm going to focus on CEOs and great companies instead of worrying about what he might do.
All right, and so you've got some other things you talk about. How about this? I mean, are you as bullish as I am about what really could happen and come out of this big, beautiful bill? There are some things in there that could really send us higher.
Well, I think there's a lot in there if we get it right that is going to ignite a favorable business environment. Now, as you know, I don't do politics, I do money. So what I look for in the big, beautiful bill is, can that unleash creativity? Can it unleash innovation? Can it unleash capital expending, bigger revenues, bigger profits? And the answer is very clearly yes, because a profitable business environment will create an environment where innovation flourishes. That, to me, is the real linchpin here. So I could care less about, all the gotchas or gimmies in the bill. What I care about is that business leaders are going to have confidence. That's going to bring investment. Investment is going to turn into profit. So I think the answer is yes, 6,500, maybe even 7,000 plus by the end of the year, as hard as that is to imagine.
Wow. I had somebody on my radio show earlier this morning thinks that and he means not a rabbit bull, but he thinks that we could really see some great gains over the next 6-7 years because of what's been unleashed, deregulation and the likes. And to your point about politics, I think it's really important, and I'll say it because it's what makes you good or great even, is the fact that you don't let politics get in the way of your trades. And to go to what I was saying in the first part of this segment is, I do think end of March, early April, a lot of people traded their politics, and look what that did. That got them in a lot of trouble.
Well, they made the worst mistake you can make, which is you let your emotions get in the way, you took your discipline off the table, and you reacted. And action beats reaction every time. And if you study like the OODA loop or any of the special warfare commands, the tenets, martial arts, whatever it is, action beats reaction every time. And if you're reactionary, guaranteed you're going to miss it, because if you're playing offense, you can win. If you're playing defense, even if you think you're going to lose, you still play to win. And guess what? You do.
Yeah. Great stuff as usual. We got a ton of people that write in after you're on saying how much they like what you have to say. So proof's in the pudding. You do very well. Thank you very much, Keith. We can't wait to see you again next week. Keith Fitz-Gerald coming to us all the way from Seattle, Washington.